If you're watching this video, I'm assuming you have survived the recent crypto carnage that we've seen over the course of the last week. Pat yourself on the shoulder. Kudos. That was a rough day at the crypto office, and if I'm going to be candid, the reality is that it may not be completely over, but at least for the time being, we're kind of sailing through calmer waters for now. If you were around in this space in 2020, you may remember the COVID-19 market flash crash where we saw actually an even more pronounced crash of about 30% over the course of really just a few hours. But the good news is, as painful as that was, we saw a pretty rapid and a pretty strong recovery pretty much immediately afterwards. That was actually March of 2020, Friday the 13th, as I recall. And then fast forward to about a year and a half later, the bull market really was in full swing. So we weren't all that far away from some very, very good times, some record-setting times in crypto. This is going to sound a little cliche, but as you know, they like to say that history doesn't repeat, although it does tend to rhyme. And we may similarly be coming out of kind of a dark period right now, but subsequent to which we're going to have a nice recovery and a nice longer prolonged bull market. If that's the case and you have that longer term perspective, that longer time horizon that you're looking to invest into here, that is to say more than the next day or the next week or the next month. And if you have a little bit of dry powder left over, you're going to want to hear about these three altcoins that we're discussing in this video. They're all terrific projects and they have that mass market appeal because all of them have tokens that are priced under $1. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. I wish you well if you choose to invest, but do remember that I'm not a financial or investment advisor by any means, and that means correspondingly that this video is not official financial or investment advice. We are beginning here at number one with Mantra Chain, ticker OM. And we're moving around in the RWA sector here, real world assets. Check out this video from yesterday. We did a deep dive into Mantra actually. And really what's most exciting about Mantra is this hot narrative that it occupies, RWAs, right? Because if you've been paying attention, you know how white hot this space is right now. Let's do a quick recap on RWAs here. It's a space with tremendous growth potential. BlackRock, for example, has invested in RWAs. Mantra is one of the projects that got their attention and their money. And I've mentioned this stat several times now, but it bears repeating. The Boston Consulting Group, or BCG, they think very highly of RWAs as well. They are predicting a $16 trillion market cap by the year 2030, which is just over 5 years away. And that $16 trillion at that time is going to be equivalent to 10% of the global GDP. Again, $16 trillion in 2030. That's going to be 10% of global GDP. This is an unbelievably rapidly growing space. And when it comes to Mantra, its team has built up the chain using the Cosmos SDK or software development kit. It's also part of the IBC or the Internet of Blockchains. However, the twist here is that Mantra is mainly meant for institutions and traders, but you can still buy the OM token in case you want to. However, again, they are aiming more specifically and tailoring themselves to the needs of institutions and traders. And Mantra is a permissionless chain for permissioned dApps. This just means that you need to complete a KYC procedure before you can use their dApps, but you do not need to KYC just to buy or to trade OM. Mantra also offers compliant trading and has licenses for it. So for example, in real estate or in equities, there's SOMA in the US, which is run by the Federal Reserve. And during the recent crypto market crash, OM dumped all the way down to 86 cents. It sits just below 99 cents at the time of this recording. So it's back up a little bit with a market cap of $833 million. And as you can see, that represents nearly all of its FDV, its fully diluted value, which is $885 million. That's because its circulating supply of 838 million tokens is nearly the entirety of its total and max supply, 888,888 tokens. Moving right along here, and at number two is our surprise pick, Kujira. Ticker is KUJI, K-U-J-I. On August 1st, their KUJI token started to crash. Its price went from 96 cents all the way down to 32 cents in only 2 days' time. That is a 66% fall. Then yesterday, the price jumped up by 30%, up to 54 cents, and today, as I record, it sits at 48 cents. So what exactly happened? Kujira originally came from Terra Luna, and then after that particular crash, it moved to Cosmos to run its own chain and thrived. As recently as 8 months ago, in December 2023, KUJI reached its all-time high at $5.56. It's a good project with strong fundamentals. However, earlier this month, it overplayed its hand in leverage trading. The team used operational funds in leveraged positions on their own platform. However, their KUJI token reserves were under-collateralized, and in volatile market conditions, their positions got liquidated. Pulsar Finance tracks the team's wallet, and it shows a $1.8 million debt, a little bit more than that actually. It was the team's goal to bootstrap liquidity and activity. However, that backfired. You would think they learned a lesson coming from Luna, but apparently not, so that's pretty disappointing to see. So you're probably wondering why we're recommending Kujira in this video right now. It seems like this is possibly an irredeemable mistake. Well, the thing is, the team was pretty upfront about the situation and is currently looking for solutions. They realized they messed up and they stood up to that. Now, that may not be enough for you, and I would understand your sentiment, but historically the team bounced back very successfully after the Luna disaster, and it wouldn't surprise me if they can do it again. You can be the judge of whether or not they should get a chance, but that's just objectively what they've said, and that's the situation. Now, let's consider ThorChain for a moment. One of the leaders of ThorChain has proposed a pretty solid plan. The short version is as follows. It involves giving liquidity to Kujira. And the project pays the money back through a deal, which involves sharing their excellent Cosm DeFi tools with ThorChain. Cosm, or the Cosmos-compatible version of WebAssembly, is the second biggest virtual machine in crypto after Ethereum's EVM, of course. It's certainly an interesting proposal, and to be fair, it may not be sufficient for you. Kujira may not be able to earn back your trust after the stunt that they just pulled, but this is certainly enticing to me, and I'm a big fan of otherwise amazing DeFi projects joining forces. So let's see. Lastly, here we're looking at ONDO Finance, ONDO, and with this project, we are firmly back in the RWA sector. To put this in perspective, ONDO tops the list of RWA projects as measured by market cap, sitting right now at $1.05 billion. Not bad for a project that launched on the 18th of January this year, about 7 months ago. Mantra Chain, as we discussed earlier, occupies the number 2 spot. And like Mantra, ONDO also targets institutions. To be able to trade on ONDO, you need to complete a KYC as an individual or a KYB, that's Know Your Business, as a company. Onboarding starts at their USDY webpage. Then after onboarding, you can mint or redeem USDY only on business days. However, ONDO Finance is not available for US residents or entities, unfortunately. USDY is a tokenized note, or RWA. It's backed by short-term US treasuries and bank demand deposits. It has a 5.35% APY and a TVL of $341 million. This is one of their main products, too. And ONDO has gotten a major boost in popularity. At least one of the main reasons for that is because BlackRock backs it. In March, BlackRock launched its first tokenized treasury fund that's called BUIDL, B-U-I-D-L. That stands for BlackRock USD Institutional Digital Liquidity Fund. ONDO moved $95 million of assets to this fund. And now ONDO also has another token, OUSG. However, this is only available for qualified purchases. OUSG is also backed by US Treasuries, and so this BUIDL fund allows for instant OUSG settlements. When ONDO made this move, their ONDO token went up by 40%. And in more recent news, ONDO even surpassed BlackRock in TVL in tokenized treasuries, beating BlackRock by $2 million with a TVL of $521 million. So it was a narrow victory, but a victory against BlackRock is still very substantial no matter how you slice it. After Black Monday, ONDO's price rallied 30% from 51 cents to about 70 cents. And we sit here at about 75 cents, as you can see, up 9.5% on the day. Clearly a hot project. ONDO has a market cap of $1.05 billion. Again, it is the largest of all crypto RWA projects by market cap. The downside here, and I'll call it out just candidly, is that only 14% of their ONDO tokens are in circulation. That's not good as far as a feature goes for an ideal project, but not necessarily a deal breaker either. People attribute more or less weight to that depending on their investment preferences. But either way, only 14% of tokens are in circulation. It is something that you ought to know about.